Billions of dollars are pouring into one cryptocurrency, and it's not Bitcoin, Ethereum, or Solana. It's a Japanese blockchain project called Jasmine. But why are global investors betting so heavily on this relatively unknown token? Could Jasmine be the next major disruptor in the Internet of Things and data security space? Let's break it down and see what's really going on. Jasmine is not just another name in the crypto market, a project with a unique identity and a growing reputation. Based in Tokyo, it's often called Japan's Bitcoin and is one of the very few blockchain ventures officially registered with Japan's Financial Services Agency. This is a big deal because regulation and legal compliance are still rare in the crypto world, which is often plagued with uncertainty and scams. This level of transparency has helped Jasmine gain the trust of both seasoned institutional investors and everyday traders. At its core, Jasmine merges Internet of Things IoT technology with blockchain to tackle one of the most pressing issues of our time: data privacy. Think about it. Our homes, cars, phones, watches, and even refrigerators are now connected to the internet, constantly collecting and sending data. While this makes life more convenient, it also makes our personal information more vulnerable. Jasmine's mission is to give data ownership back to the people. With their platform, users can securely store data, control who accesses it, and even decide whether to monetize it. What sets Jasmine apart from many other blockchain projects is its real-world functionality. The secure knowledge communicator ensures that any data sent between devices is encrypted and safe from interception. The Smart Guardian system adds another layer of protection by giving users full control over stored data, even if a device is hacked or stolen. This is not just theoretical technology, it's being tested and implemented in collaboration with major Japanese corporations, especially in the electronics and automotive industries. In early 2025, Jasmine announced a landmark partnership with a leading consumer electronics manufacturer in Japan.
Wow.
This wasn't just a PR stunt. It was a turning point that triggered a huge surge in trading activity and brought in new waves of investment. Suddenly, Jasmine wasn't just a promising blockchain project; it was one that had corporate validation and real adoption potential. But let's be real, every opportunity comes with challenges. The IoT security market is already crowded, with giants like Cisco, IBM, and other blockchain competitors fighting for dominance. Expanding outside Japan will require strategic alliances and user-friendly tools that make blockchain technology easy for non-tech-savvy people. This is one of Jasmine's biggest hurdles, making their technology as simple and intuitive as it is secure. From an investment perspective, Jasmine's tokenomics are also worth noting. The total supply is capped at 50 billion tokens, but a large portion is locked away for partnerships, ecosystem growth, and future development. This means that if adoption increases and supply remains controlled, scarcity could drive the price up over time. The project has also introduced periodic token burns and buybacks to manage supply, a strategy that often excites long-term investors. Looking to the future, Jasmine has the potential to expand far beyond Japan. The team is actively exploring partnerships in smart home automation, connected vehicles, healthcare IoT, and even AI-driven data analytics. Imagine a healthcare device that collects sensitive patient data, but stores it securely on Jasmine's blockchain. This could revolutionize patient privacy and data sharing in medicine. The possibilities are vast, and Jasmine's roadmap suggests they're thinking beyond just the crypto trading market. So what's the bottom line? Jasmine is tackling a trillion-dollar problem with a combination of regulatory compliance, advanced technology, and growing partnerships. Yes, competition is fierce, and adoption takes time. But the billions already flowing into this project suggest it's on a trajectory worth watching. If they can overcome the barriers to global adoption, Jasmine could become one of the most significant blockchain players in IoT security. The question now is, are we looking at the early days of a global disruptor? Or is this hype that will stay mostly within Japan's borders? Only time will tell. But one thing's for sure, Jasmine is a project with both vision and momentum. And in the fast-paced world of crypto, that's a rare combination. So what do you think about Jasmine's chances in the global market? Share your thoughts in the comments, and don't forget to subscribe for more deep dives into the most exciting projects shaping the future of technology and finance. SoFi Technologies has been making waves in the stock market, and recently, its stock price has seen a sharp jump of around 15%. This sudden surge has caught the attention of investors, analysts, and financial enthusiasts everywhere. But what exactly caused this impressive spike? Let's break it down in detail so you can understand the bigger picture. SoFi is best known as an innovative online personal finance company that offers a range of products from student loan refinancing to personal loans, credit cards, insurance, and even stock and crypto trading through its SoFi Invest platform. Over the past few years, the company has positioned itself as a one-stop financial hub. Aiming to simplify how people manage their money, this strategy has been paying off, and the latest earnings report is proof. The recent surge in SoFi's stock price was largely driven by its quarterly earnings announcement, which exceeded market expectations. Revenue came in higher than analysts predicted, and more importantly, the company showed strong growth in its customer base. In fact, SoFi reported millions of new members signing up for its services, showing that its marketing campaigns and product offerings are resonating with people. The management also announced that SoFi has achieved profitability on an adjusted EBITDA basis, a major milestone for a relatively young fintech company competing in a crowded market. But it's not just the earnings that have investors excited. SoFi has been expanding aggressively into banking services after acquiring a bank charter in 2022. This allows them to offer high-yield savings accounts and checking accounts directly to customers. Because of this, SoFi can now control more of the customer relationship, reduce costs, and increase profit margins. This move has been a game-changer, enabling them to compete more directly with traditional banks and other fintech firms like Robinhood, PayPal, and Square. Another factor behind the recent rally is improved sentiment toward the fintech sector as a whole. Over the past year, interest rate hikes and economic uncertainty had weighed down growth stocks. But with signs of stabilization in the economy, investors are once again looking at high-potential companies like SoFi. Analysts are pointing out that the company's diversification across multiple financial services gives it an edge in weathering economic changes, unlike smaller fintechs that depend on just one product. For long-term investors, SoFi presents an interesting opportunity. Its strong brand recognition, growing customer base, and expanding range of services position it for continued growth. However, it's important to remember that this is still a relatively young company in a volatile industry. While the 15% stock jump is impressive, investors should watch for sustained profitability and consistent revenue growth before making big investment decisions. In conclusion, SoFi's recent price surge is the result of a combination of factors: a strong earnings report, strategic business expansion, improving market sentiment, and investor optimism about the company's future. Whether you're a short-term trader riding the momentum or a long-term investor looking for growth opportunities, SoFi is definitely a stock worth keeping on your watch list. The next few quarters will be crucial in determining whether this surge marks the start of a longer uptrend or just a temporary boost.